Hello, and welcome to our next nap. My name is Irina Ryshkova, and I'm your nonprofit auditor, and NAP stands for Nonprofit Auditor Points. These videos are not authoritative. I created these NAPs to give you some information about how auditors work and hopefully help nonprofits, their management team, and accounting team to understand better some accounting issues, auditing issues, and have a better communication with your auditor. Okay, let's start. Today's nap I want to devote to discussion of search unrecorded liabilities. If you're a nonprofit, you probably never heard such words. But we as auditors, we use them very often. But don't get too intimidated. It really just seems when we say in search unrecorded liability, what we as auditors saying, we're gonna see if a nonprofit properly record expenses in its correct period. We also call it cutoff. Cutoff, meaning that if expense for recorded in a proper year. What does it mean? Under GAAP, accrual method of accounting, we record expenses when they occurred, not when nonprofit paid invoice, not when invoice received, but rather when expense took place, occurred, right? So for example, let me explain it to you. If my nonprofit is year-end December 31st, 2024, and I want to make sure that all expenses that incurred in year ended December 34 is included in the year ended December 31st, 2024. Some of those expenses might not have been paid yet. Nonprofit could have received invoices but have not been paid, and also some invoices might not have been received yet, but they need to be included still in the year ended December 31st, 2024. So let's discuss how nonprofit can make sure that all expenses are recorded in a proper period. As we said, in the year when the expense related to this invoice had been incurred. So first of all, let me explain what it means incurred. Sometimes even as an auditor, as of December, for the year ended December 31st, 2024, we receive email from the client and saying, Irina, can you please bill us partially for your future audit? We just want to make sure that we prepay you 25% of your bill. And I will send invoice as of December 31st, 2024, but we as the auditors did not perform any work. So in this case, nonprofit received my invoice, but should they record as an expense? No, because the services that we will provide have not incurred as of December 31st, 2024. If nonprofit received my invoice for future work that we're gonna do, nonprofit need to record as a prepaid on the balance sheet, not as an expense. Other example, we finished audit for the client that ended December 31st, for the year ended June 30, 2024, and we ended the work. All was done, approved as of December 31st, 2024. We have not sent invoice yet, but audit report is approved and all work is done. Now, we sent invoice on January 15th. Under accrual method of accounting, you need to record invoice for the period services were provided for. So if we finished our services as of December 31st, even though we send invoice a little bit later, it's gonna say that we finished on December 31st. Nonprofit needs to record that invoice as of December 31st, 2024, because that's when expenses incurred. So it's very critical that nonprofits understand their invoices, what services that they received. And it's possible that some vendors did not send invoices as of December 31st for the work that was done as December 31st. Therefore, it's very good practice to keep, we call it, books opened for about 2 weeks or 3 weeks or 4 weeks even, and call the vendors and say, please send us invoices, please send us invoices. We need to make sure that we record that invoice. Even if the vendor have not sent you invoice, but you as a nonprofit know that you received the services as of December 31st, you still need to accrue for that expense. Even if you have not received the invoice, but you do know approximate amount of the service, you can record as accrued expense. It can be estimated. As you recall, we perform audit services and we issue financial statements that are not materially misstated. So if your amount that you accrue is going to be slightly off, as long as it's not material deviation, and for most nonprofits, material deviation, we're talking about $10, $15, $20,000, then we're absolutely okay. You accrue based on your best estimate. But you need to incorporate all invoices that are for the services that nonprofit received before December 31st, 2024. We as the auditors, we perform procedures that we call search for unrecorded liability. So what does it mean? We're saying that we need to look for invoices that organization possibly missed that should have been recorded as a liability, let's just say December 31st, 2024, at the end of the year. How do we do that? So we as the auditors, we take your general ledger meaning transaction from your bank accounts for after December 31st, 2024. Let's just say for months or two. Typically auditors, if available, pull 3 months of data. All the payments that were done 3 months after the year end. However, as an auditor, I would be more specifically interested in the first months, because second and third months, they are important but not as valuable as the first months. Because the first months, most likely, we can find invoices that were paid by nonprofit, but for the services that were provided before December 31st, 2024, but they were not recorded as a liability, like accounts payable. They were not accrued at the end of the year. So especially if my nonprofit that we're performing audit for, year ended December 31st, 2024, we're gonna pull all the transactions from bank invoices that were paid in the months of January 2025, and we're going to make selections for large payments, and we're going to ask our nonprofit to provide us invoices for those payments. And we're going to look at those invoices and see not only date on invoice, but we're going to look for the services that were provided, when these services were provided for. And if we see that the services were provided in 2024, it will tell us that this invoice should have been recorded as a liability before December 31st, 2024. And what we're going to do, we're going to go and look in accounts payable aging report, in accrued expenses, to see if this invoice was properly accrued as a liability as of December 31st, 2024. And if we don't see that invoice, it means that organization missed and did not accrue correctly that expense that took place prior December 31st, 2024. So search for unrecorded liability or proper recording accounts payable affects several things, and they can be quite significant. They affect organization accounts payable, they affect expenses, and they can result in overstatement or understatement of net assets. including restricted net assets. And it also can affect contingent liabilities. Very often, what we see that nonprofits do understand that they need to record invoices from vendors for the proper period of time. However, they lack of understanding in internal procedures to record their own promises when they promise to give to somebody, to some other entities or individuals. For example, a lot of foundations, they give grants. And if your foundation, or they do members support to others in some sort. If your nonprofit, for example, year end is December 31st, 2024, and your profit made a commitment prior December 31st, 2024 to give a grant, scholarship, any other support to another nonprofit, to individual, to whoever, make a commitment typically made either in writing in a grant letter, or it's in a meeting of the board of directors, the board vote to give a scholarship or give a grant. So that's your timeline when the commitment is made. And when the commitment is made, it becomes liability for the organization at that moment. It's not when nonprofit paid the grant or scholarship, it's when the commitment was made. A lot of commitments made through grant letter, when nonprofit issued grant letter or award letter or scholarship letter. So, or when the board voted on that, right? When it was made decision, it becomes a liability. So when it's done, it needs to be recorded as a liability for that, at that moment, for that year. A lot of time, if nonprofit gives scholarships or awards that are multi-year awards, then that liability needs to be split between current and non-current liability. Everything that nonprofit promised to pay within next 12 months, that's going to be current or short-term liability, and any scholarships or grants or awards that nonprofit gives to others that's going to be paid after for the period longer than 12 months, that's going to be long-term liabilities. So that's also very critical to understand, because liability can come from external vendors, but nonprofit can create your own liability by making commitments to give awards or scholarships or any other pledges to other entities. And why we are so specifically concerned about search for unrecorded liability. So first of all, it's expenses that can be quite material, especially if we're talking about award or grants. So when nonprofit gives awards or grants to others, they can be quite material numbers. And if they're missed or misunderstood by nonprofit how to record properly, financial statements can be materially misstated. So it's very critical. Also, it's understanding of the GAAP accounting, general accepted accounting rules, principles, right? So under GAAP, revenue needs to be recorded when it's unconditionally promised or earned, and expenses needs to be recorded when they incurred. And you need to understand when this is occurrence date is happening, right? So in order for the nonprofit to make sure that expenses are properly accrued, it needs to have some simple policy and procedures. And these procedures needs to be performed at least annually. If nonprofit is a small entity and it lacks manpower, it does not need to create a grand policy and procedure that makes the work of nonprofit difficult. But it does need to put something in writing to ensure that the search for proper recording of liabilities is done at the end of the year. And a lot of nonprofits takes months sometimes several months to close books. It's sufficient time to receive all the invoices after year end that should have been accrued, even if they were not received by the end of the year. Therefore, the best way to accrue for expenses, it's not just bookkeepers, because very often bookkeepers know only and they see only invoices. Sometimes they're not aware of the pledges that the board made, commitments that were done. So ideally, and some invoices also lacking of important information of description on invoices. So a lot of bookkeepers might not even understand what this period is for, because it might just say rent. And nonprofit and bookkeeper would not know when this rent took place. So ideally, search for proper recording of liability needs to be done with the operation director or executive director, program director, and bookkeeper together. One additional point that I would like to make, a lot of time, invoice can indicate that services will be provided in future. However, it might still be liability. Let me explain it to you. For example, if the year end of the organization is December 31st, and as of December 31st, nonprofit received invoice that says, for the special event, rent and food, 50% prepayment, and you know that event is going to take place in March 2025. So just by looking at invoice, we do see that it's for rent and food for the event that's going to take place in March. However, it is a contract between nonprofit and a service provider for a special event that says this 50% deposit is non-refundable. If the event is not going to take place, you're not going to get funds back, and the prepayment is due right now. In this case, this invoice could be liability as of December 31st, 2024, even if it's going to be for future. Period. Therefore, a lot of time, especially for material expenses, large expenses, unusual expenses, not recurring annual expenses, it's very critical at the end of the year. Take a look at your accounts payable, see what invoices you accrue, and ask your vendors what invoices we have not paid, what we will be paying, and what we paid, let's just say, in the next months, and whether those invoices should have been accrued as a liability at the end of the year. We as auditors, it tells us a lot. If nonprofit does accrue proper invoices, it means that they understand GAAP. They do have a system of procedures to record them, and they do have a system of closing their books correctly. Again, there is no need to do it every month, unless your internal reasons, whatever you guys would like to have it on accrual basis every month, please do. But for auditors, we really looking for the nonprofit to understand and close their books at the end of the year correctly. Therefore, if we as an auditor will find not properly recorded a lot of invoices or large material invoices, we will issue letter of significant deficiencies, sometimes material weaknesses, about that nonprofit needs to understand GAAP, nonprofit needs to understand accrual method of accounting, and needs to develop system of controls to make sure that important invoices are expenses recorded in a proper period of time. Because if your invoices are not recorded correctly, the nonprofit, not only this year financials are misstated, they also could be misstated next year and prior year. So because these invoices go not in proper period. So they 1 year could be understated expenses, they will be overstated in the next year. So it might affect several years. To conclude, it's not difficult to do. Probably will require a couple hours, maybe 3-4 hours at the end of the year, to develop a system of procedures to search for unrecorded liabilities, to make sure that all accrued expenses that needs to be recorded as a year end is recorded in a proper period of time, and that you perform a search of unrecorded liabilities and have a proper cutoff. Thank you so much. Pleasure to help you guys. Hopefully you learned something today to help your nonprofit to have a better system of accounting controls and procedures in place. Thank you, and looking forward to see you next time. Bye.